welcome everyone to this month's monthly market update for March 2023. My name is Steve Latham and I'm the Chief Investment Officer for Bernanke Wealth Management. And we want to discuss inflation. I know it's a topic that we're kind of beating a dead horse on, but it's something that is continuing to have an outsized impact to the market overall, but obviously a lot of policy decisions that need to be made near term and into the future. And so we just want to update everyone on some of the things that have been happening since the beginning of the year and show you where our expectations appear to be heading, especially with this week's additional data that is coming out on jobs and next week's consumer price index report. So let's start with where yields are, where inflation is today and where it's come down from. So we can already see that from its peak in the middle of 2022, inflation has come down quite significantly. The purple line is the consumer price index, and then the orange line is the personal consumption expenditures index, which is the Federal Reserve's preferred measure for inflation. They generally look at the same stuff, which is why you see them trending in the same direction. But suffice it to say, since the middle of last year, we've seen inflation trending down. The issue right now is we had some hot January data that is starting to concern the market as if it's though a potential trend or if it's a blip on the inflation radar. So what we can see here is the PCE went up just a little bit and the CPI was actually flat in January, obviously discontinuing that trend of inflation falling throughout the year. Now, we do believe that inflation is going to continue to fall throughout the year, but starting out the year with a number that isn't so good is, again, getting market participants a little bit worried. That's having an impact on overall yields. We've seen yields increase throughout the year. We can see that in this following chart. This is the interest rate curve or the yield curve for United States Treasury bonds. And the red line here is where yields are currently at. The blue line is where yields were just at the beginning of February. And so what you can see here for a one-year bond, the current yield is just above 5%. At the beginning of February, just a couple weeks ago, that was closer to 4.5%. Now, all the way out here, looking at the 10-year yield, that was below 3%, and now it's a tick above 4%. That large of a move in treasury yields in such a short period of time can cause some indigestion in the overall equity market. And that's why we've seen over the past couple weeks the market fall from its near-term highs on the S&P 500. And what we're continuing to see is a market starting to stabilize until it starts to get new data in the form of inflation and overall economic health to see if we're going to go higher because the economic data is softening, as backwards as that sounds, or if we're going to go lower if we continue to see really hot jobs market data and inflation data. Now, the other thing that we can look at here is what are the expectations for the Federal Reserve's rate hike policy? And you'll recall at the beginning of the year, the expectation, generally speaking, in the market was that we were going to see some rate cuts at the end of 2023, perhaps into 2024. We felt that was a little bit early, considering we assumed there to be some bumps in the road for inflation falling. We're getting that a little earlier than what we expected, and therefore the market's assumptions have started to change. So I know there's a lot of numbers on the board here, but we're going to walk through it here real quick. What you can see are effectively the odds of what the Federal Reserve is going to do as far as rate hiking policies concerned at each of their next meetings. So over here, we have the March 22nd meeting, which is coming up here in just a couple weeks. And currently, the overnight rate is 4.5 to 4.75%. That's where we're at right here. Now, because these are odds, it's going to give us a percentage of what the market thinks is going to happen at the next meeting. Currently, the market thinks there's a 30% chance for a 0.25% rate hike at the March meeting. Now, because of some new data that came out just this week, we're recording this on March 7th, the market's expectations have changed to a 70% expectation that there's a 50 basis point or 0.5% increase in the overnight rate. Now, we still think it's kind of up in the air despite what these odds are saying, because there's still some pretty big economic numbers that are coming up in just the next couple days. So depending on when we view this video, some of that data may have already hit and clarified what the Federal Reserve's position is going to be on this rate hike. But again, suffice it to say, the path forward is going to be higher, not necessarily neutral at this point. And we can see that in the next couple meetings as well. The May 3rd meeting currently has a 60% chance of another 0.25% rate increase, or if they go only 0.25% here, we can read this as a 60% chance to get to a 0.5% increase during that May meeting. And then during the June 14th meeting, there's another 0.25% 0.25% rate hike baked in to the tune of just shy of 60%. So none of this is set in stone, and all of this is subject to change. The Federal Reserve is very data dependent, but if this were all to occur based off of the current odds for rate hiking going forward, we're actually going to have another 100 or 1.0% increase to the overnight rate. Right now, the equity market's actually digesting this really well. We're not seeing a huge fall off in total prices and stock valuations as a result of these reset expectations. And again, I think the market is more concerned with how long are they going to keep these rate hikes in place versus how high are they going to get. And that's where we can look further into the future, all the way down to the January 31st, 2024 meeting, where there's a 31% chance for a 0.25% rate cut. So right now, we're still data dependent. There's still a lot that can happen in the market. There's going to be a lot of data coming out just over the next couple days that we'll be able to update you on in the next monthly market update. But for now, this is where we're at. This is kind of what we think the market's going to be expecting here in the near term. If you have any questions with what we explained today, always feel free to reach out. Hopefully we'll talk to you again soon. Thank you.